Bitcoin is trading at almost $109,000. I wanted to do a quick update here on the charts with the key levels to watch. The key level that if we drop below there, the bear market gets confirmed, and also a key level if we reclaim it, that then we are looking at potential bullish upside continuation. If you're new here, welcome. My name is Dirk. Smash the like button, subscribe to the channel. I do these videos regularly to help you with my own experience of more than 10 years with charts and trading, and I give you this to help you make your own decisions for when it's better to enter, both for spot but also for trading with leverage. By the way, if you want to learn how to trade crypto with leverage, long and short, I have a course called Leverage Hero. It is completely free if you want access for it, and it'll teach you how to read these charts and how to trade. The link is in the description down below. So we're starting out here with the 4-hour chart of Bitcoin, and I think it's just a very clean chart at this point in time. So you can see here, what I've marked out is a range. We had the high of the range over here, and then we had the low of the range. Okay, so this is since August of this year. We had the high, we had the low. We swept the high, and then we dumped and we swept the low. So this is technically just a perfect range and liquidity sweeps, right? People who are buying the tops, they get wrecked, and then they buy the tops again on the sweep, but then they get trapped here, and then it dumps, and then they get trapped here at the bottom shorting it, and then it pumps. That's just how these markets go. So basically, if you look at what has been happening here since about June of this year, the price of Bitcoin has just been in this giant range, which is basically chopping between $102,000 and $125,000. So again, all of this stuff is all relevant depending on what you're doing, what kind of strategy you're following. Are you trading? Are you trading spot? Are you trading with leverage? Are you trading on a daily basis, like a low time frame, scalps, and maybe swing trades that you hold for a couple days at most? Or are you investing for the longer term, and are you taking positions once or twice a year? All of that completely changes what time frame to look at and what strategy to follow. So on a 4-hourly chart, you can see here, like you can take swing positions that last a couple days or sometimes maybe a week or two, and make very big moves. Also, if you're doing it on even lower time frames than that, and you just want to catch like $1,000 or $2,000 moves, you can do that kind of stuff on like 5-minute charts or 15-minute charts. Again, all of that is explained in my Leverage Hero course. It's free, link in the description down below. So what we're looking at here, it's a very simple if-then criteria. Nobody knows the future for sure, and all that we know about trading and investing, it's all probabilities. There are no certainties. But like we see here, I'm going to mark those levels for you. It's the same. I've made this analogy before. Like, say you're fighting in an MMA ring and you have your opponent against you, and he's got a stance in front of you, right? He's got his 2 fists, he's got his 2 legs, elbows, knees, right? He can do whatever he wants, and you don't know what he's going to do. Is he going to throw a jab? Is he going to throw a hook? Is he going to throw a front kick? You don't know. Those are all possibilities. But as soon as he moves his body in a certain way, then whatever he's wanting to do becomes more likely. So if he's lining up to throw a punch, well, then you know how to react to that. And you have different scenarios for whatever is coming your way. It's the same with these charts, okay? So if the price goes below a certain level, then a certain scenario becomes more probable. If the price goes above a certain level, then a certain scenario becomes more probable. And as the price action folds out, like unfolds, plays out, then we get to see which scenario is more likely. And once we start to see, okay, this is a scenario that a certain outcome is highly probable, then we can take action on that. We can long, we can short, we can sell, we can buy, right? All of those things. That's how trading works, and that's how investing works. It's technical, but it's actually pretty simple. And if you adopt this framework, then it doesn't matter what happens with the news. It doesn't matter what happens with the Fed, the interest rates, the liquidity, the adoption, all that kind of stuff becomes irrelevant. It's just the charts with an if-then scenario, and you can make boatloads of money following that. It's a strategy that's repeatable, where you know your data and you can have an edge on that. Okay, nobody knows what the effect of Powell talking tomorrow or next week is going to be, right? All that stuff is completely random. You can't build a strategy around it. But with charts and patterns and price action, you can completely build repeatable patterns with high probability setups. So That's what I try and do here, and that's what I'm showing you here on this charts. So coming back to this if-then framework and applying it to a real time, you can see this level over here, it's pretty much the line in the sand, also because it lines up with the 50-week moving average. So basically about $102,000. If we lose $102,000, I think it confirms the bear market and we could drop to like 60, 50, 40,000 in the year that follows. So it is very important for the bulls to defend this level. At the same time, this high, I would even say like this level about over here. So somewhere around 120,000 is also the level that is key. So as long as we are in between these two levels, we're just chopping here and there's nothing happening. If we reclaim 120, then we can look at continuation higher to, who knows, 135, 140, 150. That's a possibility. So that's the level that the bulls need to flip. At the same time, the bears, for confirmation, need to get below here, and then we're looking at down. And in between there, it is just ranging. And if you don't know how to trade ranges, you get absolutely wrecked because people are constantly here betting on leverage, long and short, and they're just getting chopped up within this range. Again, I will explain this to you in my free course. Grab it if you haven't done so below. The link is in the description. It's actually one of the nicest things to trade the range and the chop, because once you know that this is what it's doing, you can just try and catch these moves at the extremes, right? You can catch longs here, you can catch shorts here, and you can make boatloads of money going in and out of these markets over and over and over again. So what I will also say here is that personally, I'm leaning towards us eventually breaking down below 100,000. So as long as we are below this 120,000, any sort of bounce here is basically for me a setup where I'm looking for shorts. I am looking for swing shorts into the bear market to hold until well into 2026, where I believe we're going way down below $100,000. So anything up to like 114, 116, 118,000, depending on the low time frames, is me looking for short entries for a swing that I can hold into 2026. Now, of course, like I said, there is always a possibility that we do reclaim 120. I think it's not very likely, but it's never impossible. And that's why you have this if-then criteria, because if you only stick to saying like, this is going to happen 100%, nobody knows the future. So if I'm saying here, it's going to 100% drop below 100,000 and I keep shorting it and I'm wrong, and it goes above 120 and I keep shorting, that's how I lose all my money. And that is where people who aren't good at trading, they get wrecked, right? It's just about different scenarios and you have your invalidation levels. So I have a bias that I think we're going below 100,000 and I'm looking for shorts depending on the price action where it's going to end up, maybe 116, maybe 120. And if we reject there, those are shorts I could potentially hold into 2026. But if the price goes up and it's not looking like my short idea is going to play out and we actually flip 120,000, then I might actually flip long targeting 130 or 135. Again, this is all trades and this is what you can do. You don't need to be a bear or bull. You can literally flip your bias within the same day, or the next day you can be bullish, the next day you can be bearish, and depending on the time frame that you trade on, right? If you're trading on 10-15 minute charts, you can see like over here, this is actually one that I caught in my VIP. This whole pump, I was long to the top, got out, and then I shorted on the way back down. And you can make boatloads of money on a move just like this. And it has nothing to do with being long-term, bearish, or bullish. That is just simply trading. So let's zoom out to the weekly chart over here. And let me show you what I mean here also, because you can't only look at one time frame. If you only look at the low time frame, you get too zoomed in. It's like you can't see the forest anymore because you're too close to the trees, right? The same thing there. So you have to zoom out to the higher time frame charts. And this has always been the line in the sand. I've been saying this for years. You can go back to my video. As long as we are above the 50-week moving average, it is technically bullish. And once we lose the 50-week moving average with a weekly close below, we get the official bear confirmation, just like we did here in 2022, and it took us another 50 to 60% lower. Right at this point in time, that 50-week moving average is sitting at $102,000. That is why what I just showed you, that $102,000, $100,000 level is the key. We lose that, then we get a bear market, and then we're looking at 50 to 60% lower from losing that moving average. So again, if I open this up, what I just showed you on the 4-hour chart, you can see how this bottom level here lines up perfectly with the 50-week moving average. So those are basically the conditions. It's very simple to sum it up here. If we lose the 50-week moving average with a weekly close below 102,000, then it becomes likely that we're in a high time frame bear trend with another 50 to 60% lower, meaning 50,000 or 40,000 well into the end of 2026. If we can hold this level, anything up to 120,000 is potentially a lower high where I'll be looking for shorts. And if we flip 120,000, then we are possibly just looking at bullish continuation into 130, 135, maybe 140 or higher. That is simply how it is. And we have to wait and see how it plays out. The end of this month, the monthly close, will be very important for us to have an idea of what we can expect in November, if it's more bullish or more bearish. And of course, I will do an update then. So make sure you are subscribed to the channel and that you do get these updates. And if you haven't done so yet, get my Leverage Hero course. It is free. The link is in the description down below.